So the question is, how is Tesla reporting net profit margins that are above ICE car manufacturers, internal combustion car manufacturers, despite the fact that making an ICE car is more profitable than making a battery? The battery cost is much more expensive as a price of the engine as the ICE car. We don't know that. Yeah, so I think that, look, we got to admit, Tesla sold 500,000 cars last year. 2 years ago or even a year ago, that was ahead of expectations. And that's something that we have to credit the bulls with.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, once again, I'm reacting to some comments from Tesla's smartest bear / short seller / oil shill. I don't know, not making allegations there. Please do your own research. Just thinking out loud, I might also be high. Gordon Johnson. With Tesla set to report their Q4 and full year 2020 earnings tomorrow after the bell. And yes guys, as always, I will be live streaming the earnings call. So come say hi, enjoy the chat, the live reactions, have a little bit of fun together. It's always an event. I thought it'd be fun to see some comments from Gordon Johnson. And by the way guys, I don't want to spoil the video for you too much, but pay very, very close attention. I start to get the feeling here that Gordon may be changing his tune, or at least whoever's pulling the puppet strings. Did I say that out loud? Anyway, let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Yeah, so I think that, look, we got to admit, Tesla sold 500,000 cars last year. 2 years ago or even a year ago, that was ahead of expectations. And that's something that we have to credit the bulls with.
Hold up a minute, hold up. Did Gordon Johnson just give Tesla credit where it's due, suggesting that they crushed expectations and did very well in delivering 500,000 vehicles in 2020, and he didn't even phrase that as them falling short of their goal? What's going on, guys?
But you also have to consider, we didn't expect Tesla to cut prices 14 times last year. But getting to your question, listen, Tesla seems to have an uncanny ability recently to cut the price on his car, yet report flat gross margins.
Those of us who've been paying attention to Tesla or just listening to what Elon Musk has been explaining since the master plan from like 2006, what are we talking now, like 15 fucking years ago, not even kidding, will understand that the reason Tesla is able to maintain steady margins while continuing to cut the prices of their vehicles is, wait for it, drum roll, because they're reducing their costs. So therefore, if they reduce their cost, they pass that cost saving on, the margin stays the same, yet the price comes down. It's fucking magic, isn't it?
In fact, we think that if you look at what Tesla's going to report, they're going to do they did 180,000 cars, $50,000 ASP, put a 20% margin on that, assuming their margin stays flat, 1.3 billion in SG&A and interest. That gets you to a pre-credit profit of about 500 million.
Whoa, hold up. Did Gordon Johnson just suggest that he expects Tesla to produce around $500 million profit, excluding regulatory credits, without tax credits, no ZEV credits? He's expecting Tesla to be profitable to the tune of around $500 million. It appears there's been a glitch in the matrix. Gordon Johnson opened up this discussion, this interview, by praising Tesla, giving them credit for 500,000 deliveries. Then goes on to suggest a very bullish point, although it is a little bit disguised as being bearish, but he basically says Tesla keeps cutting their prices, yet they're maintaining their margins. How'd they do that? The implications there, as I discussed, they're driving costs down. This is a really good thing. So another very bullish point. And now suddenly the change of tune. Tesla apparently can be profitable without regulatory credits by $500 million in a quarter. I may be imagining this, but something appears to have happened here. Maybe it's just a coincidence. Maybe the people on Yahoo Finance said, Gordon, you were a very naughty boy last time you were on our network. If you're rude to our guests and our hosts again, you won't be coming back. Maybe Gordon misinterpreted that as be a little bit more reasonable and realistic and kind to Tesla. I don't know, that is a very outside possibility, just exploring some options. What are some other reasons for this change in tune? Maybe the extra scrutiny of late. Some rumors circling in the Twitter sphere that GLJ Research, Gordon's research firm, isn't actually registered with the SEC, the Securities and Exchange Commission. Just a rumor. I mean, I haven't verified this, so please do your own research. I'm not making any allegations here. Maybe it's the extra scrutiny from being trolled relentlessly by Ross Gerber, who's now talking about Tesla stock moving in increments of a Gordon on a daily basis, by the way. That's a reference to Gordon Johnson's prior price target, $19 per share. I think he's at $40 per share now. I don't even know. Anyway, the point is, something has changed. Maybe the puppet master, why did I say that? I keep saying that. It's a slip of the tongue. I have, obviously just a problem speaking today, something like that. Maybe the puppet master just came out again, has said, you know what, Gordon, this dickhead on YouTube's kind of blowing a hole in all our arguments. We probably need to come up with something a little bit better. Let's forget the business now. Let's praise the business. Let's change our tune on the business. We've just got to accept reality there. People aren't buying our BS anymore. Let's instead focus on the stock price. So we can say all sorts of bullish things about the business. That's fine because we still think the stock's overvalued. That's our new strategy. I'm just kidding. Gordon doesn't watch this channel. Do you, mate?
So we think the profit, the credit profit could be anywhere from 0 to 400 million. So you're talking about a profit, a gap profit number of anywhere from 500 to 900 million. The street's at 858.
New strategy confirmed. Make hyper bullish predictions and forecasts about Tesla's future performance so that they inevitably fall short. Unless, of course, they pull off miracle after miracle, and therefore they appear to have fallen short of your expectations. You can say, well, we were expecting this, but they only came to here. Despite the fact that the implications of these forecasts are extremely positive for the business, forecasting enormous unit volume growth, enormous profitability growth, exactly what you need to justify the high price of Tesla stock at the moment, yet somehow it will look like Tesla's falling short of these expectations despite the fact that every point coming out of Gordon's mouth, every forecast, every prediction suggests that Tesla is going to do exceptionally well if they come even close to hitting those targets. This is really, really low-level trickery here. Easily picked apart if you think for more than 3 microseconds.
But with the stock trading at 200 times forward earnings versus the average for the car industry being 7.5 times, we don't think that's what's important. We think what's going to be important is what they guide their deliveries to. And I think people are expecting that number to be anywhere from 850 to 1 million cars. We think the number could be as low as 800,000 cars. So we think that number could come in as a slight disappointment.
Gordon, this new strategy was just too easy to pick apart. Start praising the company, start providing extremely bullish estimates, then hope the company falls short of those. Don't focus on the company, their performance, their growth, anything that actually matters. Just focus on the stock price being overvalued compared to automakers, blah, blah, blah. Let's just say that Tesla guides for 850,000 units. They delivered 500,000 units last year. That is phenomenal growth. Nobody's going to be disappointed with that. And for the record, I personally am expecting Tesla guides to comfortably exceed 850,000 units delivered in 2021. You can quote me on that. I expect internally they will be aiming for 1 million, but there's a huge amount of uncertainty relating to the Berlin ramp and the Austin ramp. It depends how many vehicles come out of either of those factories in the full year. It may be 10,000, it may be 100,000, it may be 200,000. Depending on where that falls is going to make a huge difference to total deliveries. At this stage, I think Tesla will guide for what is an absolute shoo-in, and then just say they aim to exceed that target to factor in that variability and that uncertainty around those 2 factory ramps.
Gordon, obviously you got a lot of attention last year with your bearish call on the stock itself. When you look at the fundamentals for the company and the expectation here, what will it take for you to become a little more bullish? In other words, if you're talking about delivery numbers, for example, what do you need to see it come in on to fundamentally change your view on how the stock should trade?
I mean, Tesla is right now trading completely out of the realm of reality. It's nowhere close to reality. Our number for Q4 was just under 182,000 cars sold. They did just under 180,000, so it was close, but they missed us by a little bit. But listen, in the roughly 30 quarters that Tesla has been a public company, excluding credits, they've only been profitable 4 quarters, the most recent of which was 3Q19. So what we need to see is consistent profitability, but not just profitability, but significant growth in that profitability to justify where the stock's trading at. Listen, Tesla cut the prices on their cars 14 times last year. If you cut the price, if Tesla cuts its price to the car, to $5,000, depending on how low it goes, there's infinite demand for volume. So the question is, how is Tesla reporting net profit margins that are above ICE car manufacturers, internal combustion car manufacturers, despite the fact that making an ICE car is more profitable than making a battery?
That's a really good question, Gordon. How is it that Tesla is more profitably producing electric vehicles then many automotive manufacturers are producing internal combustion engine vehicles. Could it be that Tesla has big brain engineers and we're starting to see operating leverage and economies of scale coming into play? Could it be that Tesla is actually capable of manufacturing components for vehicles cheaper than other automotive manufacturers? Shout out to the Gigapress, the heat pump, all the other stuff. We've been down the engineering rabbit hole on this channel many times. Could it be that Tesla has continued driving their costs down and, as we know, cutting prices and passing those cost savings on to consumers? And could it be that that trend is going to continue over time? And could that be one of the many reasons that I and many other Tesla stock investors are so excited about the company printing billions of dollars in the future? Could it be?
The battery cost is much more, but just given what they've done historically, we're going to just assume that they're going to continue to do this until, somebody comes in and really looks at these numbers in detail.
Okay, we need to stop here and try to understand what just happened. Based on my understanding there, Gordon is suggesting that he expects, based on past performance from Tesla, that they will continue to find new ways to drive their costs down and continue to cut prices on their vehicles while maintaining margins. That is an extremely bullish point. Now, there was a little bit of FUD thrown out at the end there, just a random, until somebody has a closer look at the numbers, some implication there, there's something fishy going on without actually making an accusation. Classic Gordon, but we can see through your BS, mate.
But what gets us more positive is them reporting profit, excluding credit revenues, which are one-time, basically taxpayer-funded sales, which they're going to effectively decline significantly this year, completely go away, we believe next year, as everybody's making EVs now. We need to see them be profitable in the actual selling of cars.
So Gordon Johnson suggesting for them to be more positive, more bullish on Tesla, they would need to see Tesla reporting huge profits without regulatory credits. Now, if you recall, earlier in this very video, it was Gordon Johnson himself who suggested he expects to see Tesla produce a profit of around $500 million, not including any tax credits. Tesla needs to produce a big profit without tax credits. We expect Tesla to produce a gigantic $500 million profit without tax credits. So is this Gordon's coming out moment? Gordon Johnson, the Tesla bear, has finally come out of the closet as the Tesla bull? Or are we at an interim step? What's going on? I don't know if these guys are fooling anybody now with these bullish points. It's like this company's cleaning up, they're winning, they're growing production, they're maintaining margins, driving costs down, winning, huge profits without regulatory credits. Where's the bear case?
Yeah, one thing that would stand out maybe to our viewers listening to you now relative to before is there's, a lot less concern around where its cash position is as a company. Before, obviously, there were a lot of risks when Tesla was really trying to struggle, or really the company was struggling to raise money and was looking pretty close to some serious problems there, but not the case at all anymore. They continue to kind of ride the wave here. So what are the expectations maybe there as they balance that with some pretty new plants being built, as well as leaning into the growth in China?
Right. So again, listen, I think they're going to guide to roughly 800,000 cars sold this year. I think that's going to come as somewhat of a disappointment to the bulls out there. With respect to the cash position, listen, last year, the year before, they said that, they were going to have 1 million robo-taxis on the road and the cars were appreciating assets.
Naughty boy, Gordon Johnson. Nobody is being fooled here. We might watch that again. Pay very close attention. The old bait and switch. With respect to the cash position, by the way, if anyone's wondering, over $20 billion. With respect to the cash position, insert unrelated fuddy point that has nothing to do with Tesla's current cash position.
With respect to the cash position, listen, last year, the year before, they said that, they were going to have 1 million robo-taxis on the road and the cars were appreciating assets. Again, they've cut the price of their cars 14 times last year. In China alone, the price of their Model 3 SR Plus was down 30% over the year. So clearly they weren't appreciating assets and they don't have one robo-taxi on the road. On that promise, they raised billions of dollars of money that even Elon Musk admitted or suggested that they were close to potentially facing a liquidity event before they did that. So they've used some prognostications that didn't come to fruition to really cushion their cash position. So we're not worried about that. But think about this. VW is going to have 600,000 cars of capacity in China next year based on their guidance. If they're just at 50% utilization, that's double the amount of cars that Tesla sold in China in 2020 that VW is looking to sell in 2021, and they priced their highest end car below the cost of the Model 3, not the Model Y, but the Model 3. We thought the ID3 and ID4 were going to challenge the Model Y. So there's significant competition coming into China this year.
Now, I will get to the competition that's coming disappointingly fast and all over itself in just a moment. But I just want to emphasize a point. This is a really common tactic from the Tesla bears, just manipulating the data, cherry picking, etc. The only thing that matters is how many vehicles are being sold globally. It doesn't matter about a subset of sales in any smaller region than planet Earth. It doesn't matter if sales are declining or increasing in Timbuktu or bumfuck nowhere. Only thing that matters is how many vehicles are being sold globally. This is a very obvious point, but sometimes it needs pointing out.
What happened when competition came into Europe? Tesla's market share went from 30% in Q4 to roughly 10% Q4 of 19 to roughly 10% in Q4 of 2020. They lost significant share. So when competition comes in, they're losing share. And this is a company that is basically achieving profitless growth by cutting the price of their car to keep volumes flat. That's not sustainable. So we're not worried about their cash position, but you need to see them significantly grow their business to justify the valuation. And with all this competition coming in, we think they're going to face problems this year. Admittedly, again, the stock is detached from reality. So we don't think that reality really starts to hit until Q2, Q3, because we think they have a lot of credit revenues they can recognize this quarter and next quarter. But we think it is going to hit this year.
Gordon, on the issue of capacity for Tesla's Shanghai plant, what's your expectation on Model Y?
Right. So the expectation on Model Y is they're going to do about, I think, roughly 200 to 300,000 cars this year. But listen, so to get to 800 to 850,000 cars for Tesla this year, the assumption is they're going to do about 400 to 450,000 cars in China. That would suggest a market share of around 30% in China this year. What happened to their market share in China in 2020? It went from about a high of 30%, exited the year around 14%. And that was despite, I think, 5 price cuts in China.
And there's so much going on here. So first of all, Gordon's been claiming repeatedly throughout this interview that he needs to see significant growth. That's what will make them more bullish on Tesla. Significant growth. Almost in the same breath, he goes on to say he's expecting Tesla, just in China alone, just from their Shanghai factory in 2021, to deliver around 450,000 vehicles, almost as many as Tesla globally delivered in 2020. That's obviously not significant growth, is it, Gordon? And once again, I remind you guys, the metric that matters is global vehicle sales. And as this info from ARK Invest shows, Tesla has in fact maintained a 22% global market share of the electric vehicle market. This is what matters. If Tesla's maintaining a market share and the market itself is expanding in size, that means Tesla's year-over-year sales will be expanding dramatically as well, which is exactly what's happening. Now, whether or not Tesla maintains 22% market share, maybe that falls to 18% next year, maybe it grows to 26%, it doesn't matter. Once again, I reiterate, the only thing that matters is how many vehicles is Tesla selling, period. Not selling in X or Y, just how many vehicles is Tesla selling, period. And it seems to be the case that even Gordon Johnson is expecting Tesla to sell many more vehicles in 2021 than it did in 2020.
30% on one of their highest selling model car. So despite cutting the prices significantly, they lost significant market share. And that's before the ID3 and ID4 hit the market and the EQC from Mercedes hits the market. So for them to get back to 30% market share, we think they're going to have to cut prices significantly. So we think that's going to prove a hard target for them to hit.
I'm definitely getting the feeling here that the new strategy from Gordon is to just set Tesla extremely ambitious targets and therefore hope that they fall short of your audacious expectations. Then you can say, they fell short. We were expecting more. Disappointing. Even if the company's growing their deliveries, say, by 50, 60+% year over year, he can still point and say, well, we were expecting more. Disappointed. Just for fun, let's explore this idea of a 30% market share. Forget Europe, forget China. Let's just use the global automotive market, which on a non-pandemic year is around 90 million units. So let's just say 90 million units globally. If Tesla was to, say, capture a 30% share of the global vehicle market, how many units per year would that equal? 27 million. A little bit more than what Tesla themselves are aiming to achieve by 2030. Now, I'm not sure whether Gordon is trying to set Tesla up for failure here with a 30% global market share, expecting that they can hold a 30% share in any individual market. But if you extrapolate, if Tesla's getting 30% in China, 30% in Europe, let's just say they're getting 30% of global automotive sales, that would be 27 million vehicles. Now, is this a possibility? Yes. Is this a likely outcome? I personally believe Tesla's going to get to over 20 million vehicles per year. It could be as high as 27 million, you never know. But it is going to take them some time to get there. I just wanted to put in context what a 30% market share looks like globally. Gordon is sort of presenting it as if Tesla only gets 20%, that would be a huge failure. 10% will be a disaster. But even if Tesla was only to get a 10% global market share, that's still 9 million electric vehicles per year, compared to 500,000 delivered in 2020.
Yeah, Gordon, even as you highlight some of those challenges, looking over Tesla's trading, hitting a new high today again.
Hope you guys have enjoyed this video. Let me know in the comments below. Have you noticed a change of tact from Gordon Genius Class Clown Johnson? Or has Gordon's puppet master changed his or her tune and said, hey Gordon, they're not buying it anymore, mate. We need to change tactics. Let's try. Can you guys hear that in the background? What is that? It's a weird, I don't know. It's this weird puppet thing today. I don't know why that word keeps coming out of my mouth. It certainly has got nothing to do with our subject, Gordon Johnson, at the moment. He's definitely not an oil shill or a paid puppet from somebody. This is definitely not the case. He's a legitimate research firm, despite what the apparent lack of registration with the SEC, allegedly, do your own research, might suggest. So, let me know in the comments below. Is this a conscious change of tact? Have they realized that some of the BS they've been spouting previously just wasn't working and they've decided to mix it up a little bit? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.